Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld to you for your Wednesday afternoon edition, Roller Coaster Wednesdays. You guys may recall yesterday when we were ending the show, right about the end of the day, there was a pretty aggressive market sell-off, of course, that had to do with some of the Iranian missile attacks going on. And that sent those markets just not really free-falling. I've seen way bigger sell-offs, but it was definitely an aggressive sell-off in that after-hour session. And then, of course, today we had an amazing about face, which I will show you some of those charts here as we progress through today's show. All in all, not a bad day for overall equity market indexes. Our guest for the show, maybe so, maybe not, Todd McLean, if he's here in studio on our second segment, will be our guest. I know he's out there teaching today and haven't had a chance to talk to him, so hopefully we'll have him on the program. If you have questions for Todd or myself, feel free to send those on in at powertradingradio.com. Click the little button there that says Power Blast. You can send those on in or join the chat. We've got Gizmo and Ruben over there on your Power Trading Radio YouTube channel right now, and if we flip over to the Online Trading Academy YouTube channel, we've got Chadsbury, Vernon, and Gayer joining us today, and of course there's usually many others that become part of the conversation, so feel free to send in your questions, join the discussions, but be friendly out there, all right? TJ, let's start off with the worst performer. Of course, you know, when you hear statements like Iran saying, well, you know what, we're done, we're not going to attack anymore, you know, maybe that just ushers in a little bit of stability, and all of a sudden prices of crude oil come crashing back down. That's what we saw today, a pretty significant decline in the price of crude oil, which for many, I think, actually represents a great buying opportunity. If you take a peek at this chart, you see one of the largest candles we've seen in quite some time, especially when you add in that topping tail. TJ will zoom in a little bit on that one. There you go. Look at the volatility in this guy, just absolutely all over the place. Right now down near those session lows, right around $59.90. You can call it $60 per barrel on crude oil. Keep in mind that earlier this morning, when we late last night, I guess, when we were really spiking because of the missile attacks, we were up very near 66 on crude oil. That's a $6 drop, which means you're looking at a little bit right around a $10 swing, or 10%, excuse me, 10% swing on crude oil today. So all in all, it was by far your worst performer, down 4.34%. $2.72 drop from where we closed at yesterday, but as you can tell, that topping tail really does skew things, and I can show you some intraday activity as well if you'd like to see that. That again, $59.98 was where it closed at, and 4.34, making it, like I said, by far your worst performer. Now, maybe the stability or the calming rhetoric from our political leaders has caused gold to sell off a little bit as well today. You can see also it had that big spike last night as those missiles were flying. Fortunately, there was no real personal damage to loss of life or anything. It was just building structures. At least that's what we're hearing. Gold on the day down 1.07% as the stability seems to, or not stability, but let's just say a little bit of calm in that storm. Down 1.07% for gold. 1,557 is where we are at right now. Just closed that gap that we formed a couple of days ago as well. You see a small little gap up that led to these long topping tails, which of course you see these three candles in a row. Combined, those are all very actually bearish signs because whatever happened during that trading day, it was pushed back down and closed near the lows. So gold was number 6 on your session. That brings us to the Russell 2000. Here's your RTY. A long, massive bottoming tail on most of these major market indexes, but only when you look at the futures. This is why it's so important to look at different perspectives of assets, because if you're looking at, let's say, the Russell 2000 ETF, which would be IWM, you don't get a tail that looks anything like this, not in any way, shape, or form. It's really only if you have the futures, which we're trading 24 hours. Well, almost 24 hours. So Russell 2000 was up 0.32% on the day, bringing it into positive territory. You got to like that. We got something positive out there. That's a good thing. 1,663 is where it closed at. It's actually up at 3 more points right now at 1,666. That's a gain of about 8 points on the day. All right, that was number 5. Number 4 takes us to Bitcoin. Bitcoin on the day, gain of 0.38, a lot of sell-off, not a lot of sell-off, but you can see it's just been a slow sell-off since we did the show yesterday. Yesterday when we were doing the show, we were peaking right around 8,400. Right now you're at 8,067, which for the past 24 hours is still showing up, but remember we were rallying really aggressively when we started this show yesterday. So all in all, a decent day, I guess, if you look over the flat 24-hour period, but it has been drifting down quite a bit in that period of time, at least from the last, if we go an hour from now, it would be down. All right, 0.38% gain for Bitcoin, and that was your number 4, which means we're back to the podium. Top 3 market finishers are coming up. S&P 500 takes the bronze medal. You'll see here in just a second. Similar picture to what we had before. Of course, what's of interest to many of you is the all-time highs we made today. That's right, even after those attacks. All-time highs, all-time intraday high, all-time closing high. So an interesting day, even though we started off on a real negative note. Market shrugged it off, thought it was no big deal, and here we are rallying to the upside. And I mentioned this a couple days ago, and we talked about what are some of the impacts of when we go to war. You generally get a knee-jerk reaction. Normally it'll last a day or two. We really saw it only last a couple of hours. That's not to say that we have entered into a war. It was just an attack. A lot of times the initial shock is down, which we saw, and then it shrugs it off. So S&P 500 finishing the day up 0.49%. 3,253 is where it ended up at, and it's actually up another 7 points right now. What I will do just for fun, I will show you a 24-hour chart here of, make that a 5-minute TJ. I just want people to view what happened in that after-hour session last night. Okay, there it is. So when we were doing the show yesterday, you could see that aggressive sell-off. It was pretty big. I think we were down about 1.7%. And then by the time we opened up this morning, we had already shrugged off a vast majority of that, and here we are just smooth sailing the remainder of today's trading session. So for those of you who have access to after-hour session, those of you who have access to direct access to the markets, what a great trading opportunity from a long side you saw here on the S&P 500 and some of these other indexes. They're all just fantastic out there today. All right, let's go to the NASDAQ. NQ is what we're going to look at now. That was about 0.67% gain. I will go back to a daily here just so we can see the grand scheme of things. 9,129 is where it closed at today for that NASDAQ composite. Again, a gain of 0.67% or 60 points to the upside. Just a gorgeous looking candle. We actually at one point breached those lows during that after hour session. I was really kind of focusing on these lows below 8,700 on the NASDAQ 100. We tiptoed below it for a couple minutes and then just ripped from that point, which of course you might look at as demand zone. Right? Interesting. We came into a demand zone and took off. All right, last one. That's the 10-year. Here's your 10-year note. The 10-year yield spiked pretty good today. We were at 2.57% gain on the yield. That brought us to 1.874. As you can see here, the price of that 10-year U.S. Treasury note futures contract, a red bar, red candle, long topping tail, keeping in line with what we've been talking about, which is that downward trend line that we're seeing and a descending triangle forming overall. So that is your top 7 markets out there. This was the best one from a percentage gain, up 2.57% for the 10-year, and hopefully some of those put some green into your pocket. All right, look at the clock over there. Let me make sure I got some listener questions that are coming in. You guys are awfully quiet out there today. If you have some questions, feel free to send them on in. Let's see. I'll save that one out there. Roger in D.C. So I had about 4 questions came in last night, which I'll try to get to all of them on today's show. Roger from out in D.C. said, what's the safest thing to do if you're holding large stock positions right now? The last 24 hours has given me ulcers. Yes, I could see why that would happen. I've been criticized for showing my political opinions or not, but I don't think I'm really showing a political opinion. I'm actually reading I'm reading the political stage as it unfolds. And I think that everyone would agree. If you disagree, then please let me know why. I'd love to hear why you would disagree with this one. But given the current market situations, we are in an environment where tensions are heightened. Not just here in the U.S., but we could talk about China, we could talk about Middle East, we could talk about Europe, we could talk about the EU, the British pound. Tensions are heightened because of geopolitical events going on in all those countries, and in many cases, it's things that impact all of us. So a statement or an action can have a much more profound effect on what happens in those markets than it normally would under a normal market condition. Given the fact that the conflict piece is here and it was telegraphed, it wasn't like this was a surprise that Iran would retaliate. Now, it's also, you could make the argument, it's not a surprise that we attacked Iran given what's been going on since June of last year with seizing of tankers and threats. This type of stuff was bound to happen eventually. So if you're holding a very large position, you have to ask yourself as you watch these political events unfold, at what point do you feel, I probably should protect myself or take a little bit of caution, maybe some risk off the table in case something like this were to happen. I don't think that this was a freak event. I think this was something that has been coming for a while. Now, if you sense that things are heightening, what do you do? The simplest solution is just to close your positions and go to cash. But maybe you don't want to do that, Roger. Maybe you're feeling like, I want to let this continue to run. I feel like we're in a really good bull market right now. Maybe I could go and buy some protection, right? So maybe you could buy some puts out there or sell some calls out there on various positions and collect some premium along the way. If you really felt there was going to be something like this, an attack, or you were very nervous about a large market decline, then go out and buy some puts outright that's proportional to your portfolio of whatever assets it is that you hold. Of course, depends on what securities you hold as well. If you have very large positions in thinly traded stocks that don't have options, that could be a problem, especially if you're trying to cover a large position there with those options. But those are two simple things that you can do. Anytime you're in a position where you feel uncomfortable, you feel it's too much for you or it's overwhelming, the amount that you have or the stress, it's real simple what we can do. We can back off slightly, get smaller and smaller to the point where we feel comfortable. And if that's still not working, then you can just simply go to cash until you feel that this has subsided or markets have dropped down to a point where you feel like, hey, you know what, this is a great buying opportunity, whatever those scenarios may be. But you say, what's the safest thing to do when you're holding large positions right now? Safest thing to do would be to buy some protection. If you don't want to sell those positions, and if you were okay selling those positions, it would be just to go to cash and not worry about what happens in any way, shape, or form. So there you go. Those are my two for you, Roger, out there. There's definitely a lot more that we can do with inversely related assets. Of course, options is probably the safest and easiest thing to do with regards to protection for a portfolio position. Again, going into earnings, like actually there's a question here. What was that one from Oren? Has a really similar situation with Bed Bath & Beyond's earnings announcement that happened tonight. Maybe we'll get to that one here in a little bit. So, cool. All right, well, I'm seeing he's not over in the green room, TJ. We got no... I don't see a Todd McLean yet. So when we come back from break, I will go into listener questions. Chad says, quiet here, still absorbing this Iran event. Well, if you've got questions on anything, let me know what it is. Obviously, if it's about the conflict, that's going to be an opinion because who knows what news we're seeing is real or what news is fake at this day and age. But if you have questions relating to trading and investing, feel free to send those on in right now in those chat groups on our Online Trading Academy YouTube page or Power Trading Radio's YouTube page, which has got a good conversation going on right now. Or you can send them on in at powertradingradio.com, and I'll get to all those questions right after a short break.
It's just very gratifying, and the benefits of traveling and getting to share my knowledge and really seeing a student, on Saturday morning, a little trepidation, a little nervousness, and then by Thursday and Friday, they're just following the process, clicking buttons, trading, first at sim, then live, and it's just tremendously gratifying. So I'm looking forward to the next 10 years.
Trading can be a lonely career, right? Especially if you're just sitting in your basement by yourself, typing away on a keyboard. So I needed an outlet, and I'm able to come and connect and share what I've really enjoyed, and it's helped me. And so there's part of that's the giving back, and I really enjoy that. And if I can make a difference in somebody's life, that's a pretty awesome thing.
Seeing students start out, well, I'm not sure, I'm not quite sure, I'm nervous, and to be able to give them the confidence throughout the week where they feel that they finally can do what they want to do, and that they know that I'm there, that Online Trading Academy is there for them to hold their hand, help them out anytime they want to be. To me, that's the best possible thing you can do.
For me, I wanted a way to be able to give back. Naturally, I've learned something at such a young age that this is a skill that I can use for my entire life. So being able to give back to other students who are going through that same journey, that's something that to me means a lot, and that it's a pleasure to be able to do every day.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Hump Day Wednesday edition. Thank you all for joining us out there today, and of course the questions that have come in. We appreciate those. If this is a live show, so if you have some questions, feel free to type those into the chat over there on our YouTube channels, and I'll hopefully answer those as we go through today's show. All right, let's go to Jeff sent in a very interesting question. And of course, when you see moves like we saw today in crude oil, obviously you hope you're on the right side of things. I think a lot of people felt that we're getting a little long in the tooth in this current rally in crude oil with the turmoil pushing it up. Therefore, I think it was bound to have a pullback, just didn't think we'd see it like we did today. Now, one of the factors that may have contributed to this big sell-off was we have seen over the past 2 or 3 weeks a huge surplus in crude oil inventories with regards to the U.S. And I think the last one was 11.5 million barrels of shortage, which is huge, right? It's one of the larger numbers I've seen in some time. Yeah, we were 11.5 million the previous week. The expectations were we were going to decline still, but only at 3.4 million barrels. Now, again, that should have had a little bit of a a positive push on crude oil. But today, we actually came out at 1.2 million barrels positive, not negative. So, of course, now all of a sudden, that puts some bearish pressure on crude oil. I think a bulk of what you saw here in this move today was certainly what's going on with Iran. Now, going to Jeff's question, how would you play crude oil from here? Obviously, this is juggling a chainsaw right now, and that chainsaw is fired up. So you got to be real careful with this one. You're going to start losing some limbs. However, we are coming into an area that I'm not. If we had to use odds enhancers, which I would love to actually break this trade down for you guys and run through all the odds enhancers and really qualify this zone and tell you how strong the zone is and how confident I am. But we don't do that on the show. That's going to be for the classroom environment or XLTs or Mastermind. So. This current sell-off has brought us down into an area it's of demand, but it's really not that strong. So if you were looking at maybe buying this pullback, it's not a horrible place to be buying. I'll tell you the price right around, what are you looking at, 59? Yeah, you're basically 59 down to 58. You got that $1 zone there. It's not great, but it's a zone nonetheless. There's definitely some better ones down lower, but if you felt like, we've erased weeks worth of gains in one candle. I know many people probably feeling that would warrant a buying opportunity because if you look what happened since October, things have been looking pretty good. You notice almost every pullback into a demand zone, boom, it rips out, and we've had this really big move up here. So we're bound to have this pullback. I think what we're seeing right now is normal ebb and flow of price action. This is exactly what we teach in our classes on the Trading Academy is the ebb and flow of prices, understanding where prices are most likely to turn. This would be a potential turning point here, but I don't think it's a very strong one. If I had to grade it, I don't think it's a strong one. So how do you play it? Well, obviously you can go out there and buy these crude oil futures. If you don't have a futures account or don't have access to that, you could jump into something like USO. USO is an exchange-traded product. I knew I was going to mess that up. There we go. Let's go to type in USO there, TJ, and we'll bring up USO. So this is something that you could hold in your equity accounts. You'll see a very similar picture, right? That weak demand zone I'm pointing out is to be right around here, right around $12, $12.30, somewhere in there, $12.25. But that allows you to trade it. There are some inherent issues with USO ETFs because it's simply rolling futures contracts, so there's some decay in the pricing there. Again, that's something that's a little bit more complex that we'll cover here on Power Trading Radio. But that's two ways you could play it. Obviously, buying the futures on it. You could be buying the ETF, or you could be using option strategies based off of USO or some other. There are obviously leveraged instruments. There's double and triple crude oil, but I'm not going to go into those here in the show because I think they might be too risky for those that don't know what they're doing, and we don't want to expose people to too much risk. So I would actually feel more bullish here. I would be okay buying crude oil. Why? Well, put yourself in take a step back, I guess, and think about what's going on in the grand macro scheme of things, right? How many people, actually, let's get you guys involved. I see we got Gayer and Chadbury and Vernon and others on the Trading Academy YouTube page, and then Brendan and Harrison and a bunch of others looking at on our Power Trading Radio YouTube channel. Just so we get you guys chatting and interactive out there, let's say, give me a yes or a no, a simple yes or no answer. Yes or no. Do you think that all attacks, all tension and stress between Iran and the United States government has been resolved? We're now going to get together, sit around the campfire, crack a beer, take a bong rip, whatever you want to do, and just have a great time? No or yes? Type it in chat. We're going to be all friends and amicable now? Or are we going to now, have an envoy over to Iran and we'll all just be warm and fuzzy? This one attack was it? Or do you feel there's going to be much more to come of this? Yes or no? Yes, we'll see more conflict. Or sorry, I don't know which one I'm talking about. Yes, we are at peace, or no, we're going to have more conflict. That's what we're going to do. Yes, more peace, or no conflict. So I got Gizmo, Vernon, and Harrison. Brendan, sorry. Yeah, I know I'm going to get heat from the brass for saying that on the show. I know it. Hello, Liberty. Good to see you. So those are all no's. Let's see what we got on our... and everybody else saying no. Yeah, it's just logical, right? You're not going to kick a hornet's nest and have one little bee sting you and the whole hive just goes, you know what, we're cool. I got you once. We're going to go back to our hive and it's all fine from here. I don't think there's a chance on earth that's going to happen. So I think everybody here, so Abby says, yeah, Jim, you're right. It's been 50 years of conflict. You're right. I am on the camp that says there will be more conflict. If this was all that Iran was going to do, I would be so happy and beyond surprised, because I don't want to see bloodshed of Americans, Iranians, or any other human out there. We don't need to have it. However, I'm not a president of the United States. I'm not president of Iran or sheikh or anything like that. I have no say in the matter. So it is going to be what it is. Bottom line is, most of you are all agreeing that there will probably be more conflict. If that was to happen, what does that do to oil prices? Conflict in Iran, even though they're not the number 1, 2, 3, 4, or 5 producer of oil in the world, if I remember correctly, they were like 4% or 9%, I think they were 4% or 5% of oil production in the world. In this tit-for-tat conflict, it could very easily be that instead of going after leaders, we would actually ignite an oil field or something similar to cripple the revenue generation of that country. That's almost worse than an embargo. It's a terrible tactic, but it could be done. If that happens, what's more likely to happen? That Iran's going to increase their oil production and OPEC's going to just say, hey, we're going to triple and quadruple output to offset Iran? Or that prices are going to spike in oil? I'm a believer that we are going to see much higher oil prices due to ongoing tensions, because I don't believe that this is resolved. So, Jeff, you didn't say whether I was bullish or bearish. You just said, how would you play crude oil from here? Personally, I would trade it to the bullish side. I would trade it to, this is a buying opportunity. We see a significant sell-off today. We may see some further follow-through to the downside while there is peace. But I'll tell you, the next flare-up, the next thing that happens between Iran and the United States, it's going to vault crude oil back up over 66, and we could very easily see 70 in no time if there is an escalation. And I sadly, I think that that's where it's headed. I like the peace talk and no more attack stuff. That would make me happy. But let's be honest, I don't think I've ever seen a country go, and we're all done here, and honor that. I think you'll see some rogue faction come up that's not, Iranian. They're going to say we're the rebels or whatever, and stuff will go pretty bad. So I think that if you're looking at it from an opportunity and saying, how do I trade this conflict, probably one of the more logical bets would be crude oil moving to the upside. Now, what if I'm wrong? What if we're all wrong here? Yes, and our oil, yes, Chadsbury's right. He says, and our oil reserves always stay full. Wouldn't that be nice, right? We have the oil we need, and we just disrupt theirs. That's a totally different conversation, Chad. You're absolutely right. But what if I'm totally wrong? What if all of a sudden there is peace, and we're all wrong, and then things just start ripping down with crude oil because now there's harmony, there's no seizing of tankers, everyone's all fine. Yeah, we could see a sharp decline in crude oil, but that's okay. Because if you apply core strategy, which we teach in our classes, what are you going to do? You're going to put a stop loss on your long position. This goes back to a great question I got from a viewer yesterday. It says, how do you deal with biases? I believe it was Gayer. Says, I have a bias on the Euro-British pound that it's going to be moving up. Great. Biases are okay. Biases are like opinions, right? It's okay to have an opinion. But you better be, I was going to say man enough, but it's got to be human enough to say, I'm wrong in holding that opinion. I need to change my opinion and maybe go the other direction because the facts are proving me wrong. Unfortunately, a lot of traders get in trouble for that. So if you were going long on crude oil at this level we talked about, what number did I say, TJ? It was 60 or 59? Yeah, right around that 59 level. If you're going long at 59, which is not too far away from current levels, that's fine. Just make sure that you have a stop loss in place with an acceptable amount of risk for you and your personal investing style or trading style, and adhere to it. Do not let this thing continue to rail against you if it continues to drop. So have an opinion, have a bias. I think right now, most of you would agree, our bias is to the upside, and that's okay. Just if we are proven wrong, we really, really need to make sure we get out of the way because oil can be a very fast mover, as you saw today. Steve Hall says, come on, Merlin, give peace a chance. I am all for it, man. Absolutely. As long as Yoko Ono is not involved in my give peace a chance parade, I'm good. Oh, boy. By the way, if you guys want to see conflict and an absolute, I don't know how we describe it. I was listening to a radio show here, this is probably a year ago, and actually Gary, who's one of the executive producers of the show, we were driving somewhere to go into some show, and K-Rock, I think, was the station. They came on, and Yoko Ono came out with a new single. It was a tribute to John Lennon's Imagine. And you want to talk about fingernails on a chalkboard. You want to talk about bad friends. Whoever let her produce that album are really bad friends. At a certain point, you got to turn and go, this is horrible music. This sounds absolutely awful. You want to torture yourselves in the break, go to YouTube and pull up Yoko Ono's Imagine remix. You will laugh. You will cry. You'll probably hate me forever because you can't get that song out of your head. Anyway, I don't want to digress anymore. Let's take a quick break. When we come back, I will go to some more listener questions since Todd is still not here. It's going to be just a me show today. We've got a great question from Samantha and Oren as well about Bed Bath & Beyond. Of course, I'll run through here and see yours. If you guys have some questions, feel free to send those on in at powertradingradio.com or on our YouTube channels, broadcasting live on Online Trading Academy as well as Power Trading Radio. Stay tuned, everybody. We'll be right back.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rothfeld with you for your Wednesday afternoon. Yes, so yeah, I was reading through some of the chat. Entertaining stuff. I'm sure I will get some heat from our top brass here for some of my comments today. I apologize for that. You know what? If you don't see me tomorrow, you know what caused it. Let's see. There's a good comment from Paul, and this is the sad reality of governments. And it's, I'll get hate mail from this because if I say something and somebody automatically goes, oh, well, you hate this political party, you hate that political party. No, it's policy. It's the administration's period. It doesn't matter whether it starts with an R or a D or an L. It doesn't matter what party it is. There are faults with all of them. Now, Paul says there will never be peace because this is what drives the equities up and down. It's not necessarily the equities up and down, but there will never be peace because if we don't have an enemy, if we don't have somebody as a country we can point out and say, they're a threat to us, then we don't need to spend almost $1 trillion on defense. Right? There's no need to spend all this money on defense because there's no threat to us. So we have to create an enemy to facilitate and grow this military machine, which of course our military might is far superior and vast than any other country out there. And you can take, I think it's the next 3 or 4 in a row, add them together, they're still not as big as us. So part of it is we need to have an enemy. I mean, I say we need, from a political perspective, I think as humans, we don't need enemies. We could probably all get along pretty well. But it has been set up that way so that there is expenditure, there is cost, that we can grow our economy through these investments. And Northrop Grumman and Boeing and Lockheed, all these companies doing very well because of defense spending. If we didn't have an enemy, if we didn't have an Afghanistan, 9/11 attacks or Al-Qaeda or any of these enemies like that, would we need to have all that defense? Probably not. But that's what the machine is like. So you're right. I don't think it'll ever change. If it does change from, let's say Iran's the enemy, it will start up somewhere else. We'll always have somebody to point the finger at, and that's just a sad reality of our markets. Unfortunately, it is what it is. I'm not going to change that in my lifetime. I don't think any of us will. Bottom line is we really just have to say, what can I do to protect myself, my family, and my interests? And as this show will help, I hope, is how do I protect my financial investment decisions? So good comment out there. Let's see. I'll get to Edward's comment about JPYCAD in just a second. Let's see. So I got Jeff's comment on crude oil. Oren says, I'm long 300 shares of BBBY, which is Bed Bath & Beyond. Have been since late November. It was halted after hours today. Big drop. What can I do? Nothing. Curl up, do the catatonic rock, sit in front of your computer monitor like this until the market opens and cry. No, kidding. There's not much you can do. Now, I want to show the viewers why it's so critical that you understand 100%. If you own a stock, there are 4 dates a year you better memorize, and that's when they report earnings, because those are 4 days of year that can blindside you like nobody's business. If you own BBBY today and you didn't know earnings was coming out and you did nothing, you got smoked. And it's interesting what happened with Bed Bath & Beyond. They were supposed to report, if my memory serves me correct, I'm sure I've got some great fact checkers out there. They were supposed to report a 3 cent per share profit. Okay. They actually came out at a negative 28. That's a 31 cent difference on expectations. That is a huge miss. So what do you think happened with their share price today after hours? Well, look at this chart. Here is the chart over the last few days. This is a 5-minute chart, by the way, just to show you kind of the grand scheme of things, what happened. Look at the scale, right? You guys see some big fluctuations, some nice moves up, some nice moves down. That's a normal trading day, right? Well, that's just regular market hours. Let me show you what happens when I add in the 24-hour trading and watch how distorted this chart becomes. It's unbelievable. That chart, which had all kinds of waves, is all of a sudden almost a flat line up here at the top. Because look what happened. We closed on Bed Bath & Beyond today at a high of right around, let me get that exact number, TJ. We closed at 1682. It was halted, right? And about a half hour later, when they reopened it, it opened at 1275. That's a big drop. Now, what's beautiful about this, and I feel for you, Oren, this is tough. If you have no protection, there's not much that you can do with this. If you're a mainstream retail brokerage client, you don't have access to after-hours trading. This is why you always want to have a direct access trading account so you can access these markets in the after-hours session. Of course, you have to follow certain rules, which, of course, we'll talk about in our classes at Online Trading Academy. Bottom line was this thing right now is at 1513, but it hit a low of 1250. Now, here's something interesting. And this is why I love after-hours trading. I actually like the way that levels form. If I was to switch this over to a daily chart, remember the low on this bad boy, the dead low was 1250, right? Which conveniently is at a whole number of 1250, 50 cents. Let's go back to a daily chart on this one, TJ. And I want you to go put a line right on 1250. And of course, my supply and demand people out there are going to look at this and go, oh, I see a buy spot right there. Look, I mean, this is the best demand zone on that chart, screaming at you. For those of you who know course strategy and you can actually go out there and run the odds enhancers, this is a pretty darn good demand zone. And I'm not drawing the zone. I just drew one line. I'm not going to show you how to draw the demand zone. But bottom line is, if you had any point on this chart to buy, there's 2 points that exist, well, maybe 3, that represent great buying opportunities, and this one's the best. It bottomed out right there and rallied almost $3 out of that demand zone. Now, of course, that doesn't help Oren. What can you do? If you own something long and you don't have protection on it, which if you should have bought protection, you could have bought 3. It depends on which way you thought it was going to go. Since you were long Bed Bath & Beyond, you could have bought 30. You could have bought 3. Buy 3 of them out there, and you would have had 3 put options on Bed Bath & Beyond. If it missed badly like it did today, those options would have offset your losses that you had held on your underlier. So you could have done that as protection. You didn't. Now you have to wait until it opens. Now the good news for you is most of those losses have recouped. It's bounced significantly off those lows, and it may actually not end up that bad when it opens. We'll keep an eye on it. But that's the problem with equity trading. You know, you're stuck with a specific window of time. That's why a lot of people love the futures markets. A lot of people love Forex markets. And if you are thinking that you want to stay in that stock world, then I highly recommend you are with a brokerage firm that is direct access, something that gives you access to the 24-hour, not 24-hour markets, but the after-hour sessions for equities. That way, when this type of thing happens, you may be able to put stop losses on your trades. You may be able to get out as opposed to incur potentially further losses. But the good news for you is it's bouncing right now. For most people, you really can't do anything about it. All right, let's go to, where was that question that came in here? Edward wants to know about JPYCAD. So here's your Japanese yen, Canadian dollar. It's a very tough situation right now on JPYCAD. I'm a pattern guy. I'm a formation guy. I'm a trend guy. And if you look what's going on with the trend and the formations here, this is bearish as all get up. It is not a good-looking chart. It basically is saying that this security wants to break down further, right? So that's saying that the Japanese yen versus the Canadian dollar wants to break down further. We've got some levels right here where it's kissing those, right? It's just bouncing up against them. This is a straight horizontal line. I probably should have done a trend line. You can see that here, if we go through these tops, what's going on? TJ, do the trend line one as opposed to, there you go, trend line one. As we go through, let's say these tops here, and it's ballpark, you can see clearly this thing has just been getting weaker and weaker and weaker and weaker and weaker. So if you're looking at buying this one, Edward, I'd be very careful here because, yeah, you are buying at this area where it has been bouncing and it has not been able to break. But remember, there's an effect where if price keeps hitting a specific level, more likely it's going to break ultimately. Now, the question becomes, if it does break, which I think it probably will, let's run this line all the way over, you're sitting in a demand zone that goes all the way back into April of 2019. Your next levels are going to be down in here right around the, 0.0118? Yeah, somewhere in there. So I'm more bearish on it, on that Japanese yen CAD. I would be much more bearish than bullish. I know it looks inviting because we're basing right now, but the trend is your friend. If anything, I'd be shorting these rallies in strong supply zones. That would be my main thing to do. All right, let's see. Any other comments out there? Yeah, they did do bad. 300 shares of Bed Bath & Beyond. And well, hey, you know what? Some people like Bed Bath & Beyond. Don't hate. Everyone's got an opinion. Remember, somebody sold them those 300 shares. So someone's long 300, somebody's short. Let's see. Features only true 24-hour market when they're liquid. Yes, and that's a very good point. Brendan makes a great point. Just because something is 24 hours, or even if it's open regular market hours, doesn't mean that they're liquid. This is why one of the first things we do on Core Strategy and Online Trading Academy is we run filters and scans and say, hey, whatever we trade, we want to make sure that it has liquidity, the ability for me to get in and get out when and where I want. In the equity markets, as soon as that market closes, right, as soon as that bell rings at 4 p.m. Eastern Standard Time, its liquidity is gone. Liquidity just disappears because between 9:30 a.m. and 4 p.m. Eastern Time, market makers are under a fiduciary obligation to maintain a market, offer a buying price and offer a selling price. When those bells ring, it's Fred Flintstone action, and it's electronic. They're just snap the fingers. They are now no longer required to make a market to add stability to prices. So liquidity just evaporates, and who's left? Generally, that's the retail trader, and as we know, generally the retail traders are wrong. So something to pay attention to. Even in the futures market, there are some futures products that are just not liquid, and you probably want to stay away from those. If you are trading them, make sure you understand what times of day they are more liquid, right? There's certain commodities that have very, very liquid times, but it's just that one specific window. Make sure you understand that before you get involved. All right, yes, Brendan says, like jumping on thin ice, absolutely, and falling right on through. Let's see. All right, I'll have to get that question tomorrow. Let's go. TJ, you had the economic calendar up there. I was going to go take a commercial break, but we were going to roll right through to that today. By the way, so we had Walgreens report today. We had Constellation Brands on Lennar. None of those really had anything outlandish with regards to their earnings announcements or price movements. So, all right, let's go right into what's happening for Thursday, January 9th. I was going to go to take a commercial break, but you know what? I got stuff to do. I want to get out of here. 4 announcements for tomorrow. Now, there was natural gas, so I am actually going to go back and look at the natural gas chart here. But you have challenger job cuts, unemployment claims, the 30-year bond auction, and natural gas storage, which will be a big one for tomorrow. That always is. For the Euro ECB monetary policy meeting accounts and unemployment rate, Canada has building permits and housing starts, and finally for Aussies, retail sales. What's on our calendar for earnings? Well, let me show you. Cinex Corporation, Acuity Brands, KB Home, WD-40, Simply Good Foods Corporation, and As Inc. I think you guys just leave that one on this thing every week just because you like to hear me say As Inc. Tim Blotz will be on the program tomorrow talking about option strategies. And before I roll out of here, let's go back to that chart because I saw a gentleman's question earlier. Let me make sure I get them some props. I know you guys have been chatting a lot out there today, which has been pretty busy. Someone was asking about natural gas, and I'm sorry, I wanted to give you guys props for every time I see a question I'm going to get to, I always try to read the name out there, but I think I might have missed that one. So sorry if I don't get your name on the show today. My bad. Yep, missed it. All right, let's go natural gas. TJ, bring up that natural gas futures chart, and that's going to be on click over here. And there's your NG. This is actually very similar to what we saw with the Japanese yen CAD. You have a situation right now where you are seeing natural gas come into a demand zone. Now, this is on a daily time frame. That definitely means you're going counter trend, but it also means you have the support of historical prices. So going long isn't the worst thing that you could be doing. I think shorting right now is probably the more dangerous thing because you're sitting right near those bases. So I would probably wait until after you saw the natural gas storage report come out tomorrow morning. If that natural gas storage report come out a little bit lower than expected, then I would actually be looking for a bullish move here on natural gas, which I think has a ways to go. I think it depends on what you expect the winter to be like. You know, here we are in January, and it hasn't been as bad as they were forecasting. Of course, remember there was a lot of inventory buildup in natural gas going into the winter, more so than we've seen in years. So they are already planned for a big winter. That's why we're seeing these prices continue to drop. So make sure you look at the inventory numbers. If those numbers are still really high, then there's probably no need for gas to continue to or to move to the upside. All right, that will do it for today's show, everybody. I see I got a bunch of Forex questions. Maybe I'll start off tomorrow with a Forex type of show. Again, if you'd like to know more information about Online Trading Academy and how we can help you with some of the things we talked about today, I was talking about core strategy. I was talking about specific rules that you put in, odds enhancers, and things like that. If you'd like to learn more about those, you can click that link that's going to show up in social media right now. You simply type in your zip code. That'll tell you which of our 48 physical brick-and-mortar schools are nearest you. Each one has free classes, paid classes, community events, and much, much more. And hopefully we can help you understand how these markets really work and let you put them to your advantage. That'll do it for today, everybody. Thank you so much. If you have questions, feel free to send them on in at powertradingradio.com. Until then, happy trading. We'll see you tomorrow.